Hey traders, and welcome back to another Futures Fever show. I'm your host, Kevin Dubriske, and in today's show, are we going to cover some great topics for you. As always, we're going to be covering what market insights and direction we're trading in, if there's any uncertainty or certainty in the market, and any potential trade setups. We're also going to cover some prop firm trading benefits, and we're also going to cover how Apex Trader funding works. Good day, Fairchild. Good morning. Hello. I hope you guys are doing well today. Happy Wednesday. There we go. Got the slides up and running. Beautiful. So we're going to cover some market insights, prop firm trading benefits, and Apex Trader funding, how it works. So what is Apex Trader funding? Apex Trader funding is a prop firm that allows traders to access funded accounts without risking personal capital, and that is huge and a huge benefit for any new traders. Trade futures markets with prop firm capital. So guys, with these prop firms, we usually aren't trading a prop firm for options or stocks. These prop firms are usually specified towards futures. Apex Trader itself is just a futures prop firm. You keep up to 90% of your profits, which is much larger than some of the competitors. Some are 80-20 split. Apex is a 90-10 split, and you keep 100% of the first 20,000 you make. And there's no personal liability. Like I mentioned before, guys, one of the best benefits of Apex Trader funding and prop firms in general is that we're risking very little of our own capital to trade a lot higher in margin. So how Apex Trader funding works, the first step is you would pass an evaluation account. This is a paper account that Apex will give you, whether it's on Tradeovate or Rhythmic. And the goal of this account is to either hit the profit target, or if you do fail the account, you could always reset it or buy another one. So you want to show consistency, you want to show consistent risk management and profitability. Then you get a funded account. You trade live markets using Apex's capital. Now at first, you probably won't see your orders on the DOM. And the reason for that is even though you are funded, a lot of times they keep traders on a paper account, but don't worry, they still pay out. They will not refuse anything as long as you follow their rules. They have a good, I believe it's a 30% rule, which means you can't make over 30% of your total P&L in one trading day. So if I have a total P&L on day number 10 of $10,000, I can't have a day greater than $3,000. If I have a bunch of days that were 2,500, that's okay. But if I break that 30% rule, then they're going to decline your withdrawal and you'll have to trade a few more days to reset it. Withdraw profits, right? You get funded. What's the next step? You take out your profits. Apex is great when it comes to taking out profits. They just got rid of their payout window recently, which is huge. Before you only had 2 payout windows a month. Now you're able to take out payouts after 8 trading days whenever you start. It's a simple, low-cost way to access lots of capital. Why trade with a prop firm? So we can leverage without risking personal capital. It has higher payouts. We keep up to 90% of your earnings. Now, some people might even be a bit greedy and say, well, 90%, I should be taking more in than 90%. But guys, we have to remember, if we're only risking $50 for the eval, $150 for the funded account, we're putting $200 of our own capital at risk with the opportunity to make payouts of $2,000 and even much more. Then risk to reward wise on that, we're risking $200 to supposedly make $2,000 or more, which is a 10-to-1 risk to reward in itself. No personal losses, so we could trade without risking our own funds. Flexible trading rules. There's no long-term commitments. They don't say you have to trade every single day. Skip a day if you don't see your setups, guys. As traders, we need that edge in the market, and if you don't see your edge, don't take your trade. Apex gives traders an edge in the markets, just like I just said. It gives us the edge so that we don't have to be risking our own capital. We don't need to trade every day to get a payout. Trade at your own pace and take it slow and trade with your own edge. So they are having a major sale right now, guys. Visit apextraderfunding.com and use discount code FEVER, F-E-V-E-R, for 80% off. This sale ends February 20th. And they also have a $125 one-time lifetime PA fee. Mentioned before, the 50K account is usually around $160. Now it's only $125. And same with the higher accounts, the 150K, $250,000 and $300,000 evaluation accounts are all priced to $297, and then there's the 80% off of that $297 price, which brings these account prices to just about $60 each. So $60 for $150K, $250K worth of funding, and then another $125 once you get that evaluation account passed. You're spending less than $200 of your own capital to, again, get profits and take out profits from the market. Apex and prop firms are fantastic. Apex Trader has paid out over $400 million since 2022. 400 million, guys. They're getting close to halfway to $1 billion. That is huge. They are a great firm. They are amazing to work with. Great customer support, really easy rules to follow, and the rules help keep traders like you in line. Now, sign up, guys, for a chance to win. Going forward, we're going to be doing giveaways during our Futures Fever show. If you want, fill out the form in the comments below for a chance to win a free evaluation account. Winners are called on Friday. They're announced on Fridays, then announced that following week on the next show. This week's winner is Maggie. Maggie, congratulations. Great job. Congrats on the free evaluation account. You should have an email shortly. Join the Futures Fever live stream, guys, every week on Wednesdays at 11:30 a.m. for a chance to win. All right, so let's get into today's market, some possible trade setups, and what trades I took myself on gold today, seeing that gold has had some good momentum behind it. All right, so let's bring over our gold chart, and the first thing we note is this big impulse move right here, right? So right away we saw that we were bullish, but this is the move that I ended up taking trades on. So we didn't see that first. We're going to rewind. And every morning I like to do my pre-market prep. As most of you know, if this isn't your first time tuning in, my pre-market prep is usually done around 8:30 to 9. And I host these on YouTube. And you guys can find it at Pre-Market Prep with Kevin Dubriske. And those are every morning on YouTube on the Bullish Bears YouTube channel. So the first trade I took was I noticed that we took out a pretty strong area of interest, this blue zone down here. And I'm going to show you guys on the higher time frame how that zone looked. So this zone right here, if we stretch it to the left, was a strong area of resistance. And then we broke it and it started working as support. So at this point, I said, okay, I'm going to look to see how we react. Now, a great way that I personally like to trade and help teach others to trade is don't try to predict the market. Let's wait for the reaction. Once we wait for the reaction, a lot of times when the market is moving in our direction or reversing, it will give us that second leg or pullback that will give us a possible better entry. So at this point, I was looking at, and again, this is 8:30. I started looking at pre-market. So here's our 8:30 candle right here. This is the 15-minute time frame. I'm going to select bar one more time, pull us back a little more. Now at this point, I didn't see this trade setup. This trade setup, again, guys, this didn't show itself until the market further developed. When we let the market develop, we could then use that to our advantage to say, okay, it's developing in my favor with the probabilities I'm going to take this trade, or it's pushing against me, or we're in a range-bound price action. I don't want to take any trades. So at this point, we held this area, this blue zone, AOI, area of interest, and I saw we started to push higher. So I would immediately mark this candle out and say, okay, here's our new level of support. If buyers do want to continue, I do want to expect price to continue higher. Then I broke it down, right? We always want to do some time frame analysis. This was my 15-minute structure telling me we're going bullish. Well, then I want to look for a 5-minute, possible 5-minute or 15-minute entry. Now, my first entry, and we'll play this out for just a moment, was we created this 5-minute fair value gap. Now, the reason I was able to take this trade, and I didn't get filled right at the zone, because I wanted to wait for the reaction. Once I saw we got a very quick reaction, and I was using the tool Bookmap, which is an order flow tool. I'll show you guys right now if we could find that spot. This is at 9:05. So we were way down here. 9:05. So here we were finding support. So when the markets were trying to move lower, a good way to use Bookmap is to analyze the volume bubbles. Now, I'll give you guys a quick little intro to Bookmap, and we're going to get rid of the footprint. Now, the main thing we want to look at is our a heat map. Now, this is called the heat map. The blue and the orange, these are heat map levels. Blue levels are very light levels on the current order book. That's active limit orders. And then we have the red levels, which is passive orders. So if we have a heavy level to the upside, as we see here, 29.15 on gold, this is a passive seller that's much heavier than the prices around it. So that 29.15, once we were able to break it, we were able to hold it as support. And that was where that second trade came in. Now, this first trade, what I noticed was we had a strong level of resistance that we broke. Now, once we break a level of resistance, what I like to do is look for a new level of support that lines up with that same area. Once we start getting levels like this overlapping, it adds probabilities to our trade. So something else I noted was we had a 5-minute fair value gap, a bearish fair value gap. So this not only was a 5-minute bullish fair value gap entry, but it was also an inverse fair value gap entry. Now, an inverse fair value gap occurs when we close above it, and I'm going to make this red so you guys know that this is our bearish fair value gap, and then this was our bullish fair value gap. So we knew that these zones, this was resistance. Now we flipped it. Now we're holding it as support, and we created a new support level. So everything's adding up. Things are starting to overlap. The odds are in our favor. I was able to take this trade, and the only thing I did wrong with this trade was I didn't hold it long enough. Now, I had marked out this IBSL. This is internal buy-side liquidity. The reason it's considered internal is because you could only see it on lower time frames. The 15-minute, the 5-minute, possibly the 30-minute. But as you see, when we start going higher in time frames, this pivot gets weaker and weaker, and it becomes almost unrecognizable. So right now, I'm going to replay mode again. Now, this buy-side liquidity, this is no longer a major pivot because we had our move, this down move right here. So if it helps you guys, use the trend line tool, draw out the move, right? We sort of came up, we came down, but now when I look at the hourly time frame, we don't really have a pivot right here. The next pivot we have isn't until right up here, which is the next possible take profit, right? So we did have some resistance, but this is still internal. We want to look for the higher time frame liquidity levels, and those might pose as good targets. Now, because I had these targets, I had this trade set up. This trade did end up working out fairly well. We'll cover the next trade too, but first I do want to cover the daily time frame of gold, oil, and the NASDAQ and ES as well. And the reason I want to cover the daily time frame for you guys is so you guys have some sense of direction that the market should be trading in. I believe we are on April contracts now when it comes to gold. So let's take a look. We're looking at gold. We'll get off of the replay system. And right now, the first thing we see is a very strong move on gold on the daily. We have a pivot here, and then we have a higher low here, higher high, higher high. Look at this. This was our recent all-time high. We broke it. Now we made all-time highs almost every single day, except for one day here and today. So in the past, this is January 30th, so we could use our measurement tool on TradingView. In the past 8 trading days, so 12 days, 8 bars, because we're on a daily time frame, 8 bars would be 8 trading days. In the past 8 trading days, I see that we didn't make an all-time high only once. Out of the past 8 trading days, it was only this one candle right here. Even this day, we made an all-time high. Right here on this wick, we made an all-time high, and then we pulled back. Here we made an all-time high, very strong candle. Next day, all-time high, we pulled back. So even though we are pulling back, the overall trend on gold is bullish, guys. We should be looking for longs when it comes to something like gold until we see a stronger break to the downside. Now, because we're on the higher time frame, we could also look for a higher time frame level of support. Now, I do see a daily demand zone here around 28.85. This is my level of support that I will only remain bullish on gold until I see us break below it. So I'm going to mark that out with my trend line. We'll put a little bear emote next to it, and I'll know that once price pushes below that, I could then look for shorts. And using this zone, I would use it as a flip zone. So once we break it to the downside, I would use it for shorts. Right now, if we hold it, I would use it for longs. But if we break below it, I will look to see if we could use it for shorts. And that's how I would set up gold right now. And of course, this is the daily time frame, so we always want to break it down to a 4-hour, 2-hour, and a 1-hour to see if these time frames also line up with our bias in our trades. Now, let's take a quick look at crude oil as well. And the reason, guys, gold is at all-time highs is because there's a lot of uncertainty going on in the market. We're getting CPI back, PPI, a whole bunch of news, whole bunch of inflation data coming out as well, and it's really making an impact on the market. So got to be aware of what's going on in our economy. So let's check out crude oil, and let's see which contract we're trading on. Perfect, perfect, perfect. So guys, as you see, crude oil had a beautiful bull run from about mid-December, even over here, early December. It had lows of 66.53. Then it ran all the way to highs of 79.39. That's almost a 20% gain on crude oil from those lows in just 40 days, 26 bars, 26 trading days. Since that high was made, we have pulled back. The max was almost 11.2%. And right now we're looking at 9%. So we have had a strong pullback. We have to remember the further we go down, the stronger we have to come up. Now we are holding some major areas. We're going to look at the weekly time frame now and see what we got. And we see on the weekly time frame, guys, we do have this imbalance right here. We have, and when I say imbalance, I'm talking about areas where the market didn't fill any orders, right? A fair value gap, a liquidity level, a supplier demand zone. So this imbalance is a weekly fair value gap. Now, I personally only like fair value gaps on the 15-minute and lower. Guys, let me know in the comments if you use fair value gaps. But if you do want to look for imbalances and some time frame analysis, it does help out as well. So that would be crude. And again, on the daily, crude oil is a tough read. I would really look to see if we could remain above the 72.20, 72.50 area. That would keep me bullish. Right now, it does look like we might be creating a inverse head and shoulders. We have our left shoulder, our head, and now it looks like we could possibly be creating a right shoulder. So that might be a potential setup on crude oil. So guys, definitely check that out. Keep an eye on it. But just note that right now, if we start to zoom in, the price action on crude oil is very choppy. There's no certain direction. There's uncertainty on crude oil. It was very bullish for a while up until we finally started to sell off, just like I said, the past, how long has it been now? 27 days, about the past month, right? So crude took a quick turn to the downside. Now, if we do throw our Fibonacci tool from our low to our high on this rally right here, we did come down to the 78%. Now, the 78% is the key level. That is our golden zone. So our golden zone falls between the 61% and the 78%. And look at how perfectly crude oil was able to hold that 78%, which fell at key level $70.50, right? That's a key psychological level because it's a whole number. So that's sort of what I'm looking for on crude. We had a strong Fibonacci level hold. I might want to use the 61% now lines up with the 72. And what we could do is we could go into settings and we could show prices. So now it tells me exactly what price it's at. So our 61% is at 72.38, which is near my 72.50 level I wanted to see us hold. So that's, again, prices lining up, key levels, key zones, key areas. Once we find parts of our strategy and our system that start to correlate and line up with each other, that gives us as traders an edge and higher probabilities to take that trade. And once we're able to note the high probability trades versus the low probability trades, we're able to size in heavier on the better trades and know when to be patient on those less and more risky trades. So that's sort of what we're looking for here on crude oil. As we see, like I said, crude trying to find support down here. We looked at gold was already making all-time highs before. Now let's take a look at the ES and the NASDAQ. You guys let me know, what's your favorite futures market to trade? Let's see, NQ. So here we have the NASDAQ on the daily time frame, and you guys see all these lines over here. This is just me marking out, previous day low broken, previous day low broken. But if you ever want to switch out your charts or you ever want to clean the charts real quick on TradingView, you're going to come to the right side over here, the object tree and data window. You're going to click the top one, scroll on down to the bottom one and hold shift, and that'll select all of them for you so you could quickly delete and start fresh. So guys, look at how choppy of a chart we're looking at here on the NASDAQ. Just like the ES, just like the ES on the daily time frame, which we will note in just a moment, we're very price ranged, right? It's very range bound. We're making these lower highs, but we're also trying to make some higher lows. So right now, price is squeezing. Now, when price squeezes, a lot of times we will get that impulse move to one direction. Now, obviously, the market can't go backwards, it can't go to the right, it can only go up or down, or of course it can go sideways. So what we would be looking for is key psychological levels and major pivots. Now the major pivot we have on NASDAQ would be this 22,093 level. This is the most recent lower high. Now we do have another lower high that we just created at 21,968. So again, as we see, price action is trying to remain bearish. This lower high right here, we failed it by just a few points. So we're trying to remain bearish. However, if we start to mark out our lower lows and our higher lows, we see that we aren't making any lower lows recently. We're making higher lows. Price is starting to squeeze. Now, guys, when you're marking out trend lines like this, what I want you to do, and supply and demand too, is I want you to keep looking at the most closest ones down. So now I see that 21,968 is the top of the range, 21,943 is the bottom. Okay, well now I can maybe mark this out as a bottom, where at this point I could be patient. Our range right now on NASDAQ is, use our measurement tool, is about 1,000 points. Well, before that, it was 1,500. Before that, it was 2,000. So it's getting smaller and smaller. 1,000 points is still a large range. However, we're looking at the daily time frame and we're looking at multiple candles. When we're day trading, we're looking at a 5-minute, a 1-minute, a 15-minute. We're not looking at the daily as prominent. When we look at the daily, we're really just looking for overall direction. Now, when we look for overall direction and we see something like this, there is no overall direction until we get a firm break above or below some recent lower highs or higher lows. Now, the way the market has been moving, I'd probably like to see us move higher and continue higher. However, with inflation news, we have the tariff news, we have a whole lot going on in the economy. Even the Doge system that Elon is running now, apparently, got a lot going on, and there's a lot of uncertainty. There's no definite, the U.S. economy is going to benefit from A, B, and C. There is no say right now until we start seeing results, and the market might reflect that. And if the market, the NASDAQ and ES, are reflecting that, then as traders, it's our job to find a better market to trade during these market conditions, like gold, like crude oil. So we looked at the NASDAQ. We'll take one quick look at the ES as well. Do believe which contracts. Here we go. Perfect. Guys, check this out. I already have these lower highs marked out. We have our range here on ES, which is a bit of a lower channel. But we also, same situation as NASDAQ, right? On this daily time frame, when we look at our major pivots, we're holding them. We're making higher lows, and we're trying to make, but we're failing, lower highs. So again, price is squeezing in the sense that we're making higher lows, which is a bullish sentiment, but we're making lower highs, which is a bearish sentiment. So there's a lot of uncertainty when it comes to a market like this. Even on the daily time frame, guys, it's a red day, green day, red day, green day, red, green, green, red. It's a barcode. We don't want to trade barcodes, guys. We want to trade trends. And if we notice there are ranges in the market, then we look to trade those ranges. It's that simple. We want to be aware of the market. We want to be aware of market conditions. And what helps us as traders understand and identify market conditions, support and resistance, major pivots, supply and demand, anything we might want to use. Now, looking at ES, guys, we had that news candle this morning at 8:30. Now, if we check our calendar, today we had CPI data was 8:30 this morning. Now, the actual was 0.4%. The forecast was 0.3%, and the prior was 0.2%. So this was a pretty steady increase in the CPI numbers. I will be covering that shortly, probably in a short or somewhere on our other platforms. So keep an eye on that as well. Always like to keep you guys up to date with what the markets are doing and how they are reacting. Now, a way I like to trade, guys, data highs and lows is I like to mark out my data high and low. Now, here's our 8:30 candle, and I'm looking at the 15-minute time frame. Now, it does depend because the data comes out, and we usually get that move immediately, where you want to mark out that high or low. A lot of times, one of those directions will be pretty obvious. So our data high, it's pretty obvious it was right here because we didn't really chop up into it. Our data low right here, well, we sort of did chop around there for a little bit. So if you looked at the 15-minute time frame, the data low would be down here. If you looked at the 5-minute time frame, the data low would be right there. This part is a little subjective, right? Now, obviously, it's not going to find you that pinpoint entry. However, yo, JG, I got you, my man. Absolutely. I love doing these shows for you guys. Don't forget, fill out the form below for a chance to win a free Apex evaluation account. Now, our goal, guys, with data highs and lows is to see how price reacts to them. So because price reacted pretty well down here to this data low, I ended up taking some longs on NQ down here. I did, and I'm always transparent with everybody, my students, other traders. I did end up stopping out of this one for a small loss, and the reason for that is because it went against my plan. Now, as a trader, we have to follow our plan and our system to a T. Now, my plan when it comes to trading ES and NQ, a lot of times is to wait for market to open and let the market develop. If I'm looking for a bullish setup, a lot of times I'll wait for the market to open and look for a long position around 10 o'clock because I'll look for the pullback before my entry. And vice versa. If I'm looking for a short position, a lot of times the market will give us that move. Well, Powell must be done. Yeah, Powell must be done talking because look at us moving on our way up to that data high. Now, a lot of times, guys, if I don't see us take out both the data low and data high in the same day, it'll keep me either bullish or bearish going forward into the next few days. So the ES right here, let's say we didn't come up to 60.98, and on the daily time frame, let's see, 60.98. Let's make sure we have that marked out. Visibility, we'll put it on the daily. And okay, well, that's new high a day right there. So that would tell me, okay, tomorrow I might want to look to see if we could break that data high and try to continue. But I want to note every time we try to break these highs, we're making a lower high. So I might look at this data high and wait for the reaction. We want to wait for the reaction in the market. If I'm looking at a level and my first instinct is I want to short this level because it's an area of resistance, but then I have a second thought, and that second thought is, but I might want to go long here if we break it with momentum and volume and strength in the economy. Well, then that might have different aspects, right? A different thought on trading. That's more of flipping a coin, and that's where trading becomes gambling. And as traders, we want to be traders, not gamblers. Trade with probability and trade with your edge. Guys, I do hope this Futures Fever session helped you. Don't forget, sign up for a free evaluation account. It is a giveaway. We have one free winner a week. That is below. Take care. Happy trading, and I'll see you guys next week. Take care, everybody.